Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, August 16th. Michael Boutros here with you this morning. Good morning to Dee, Mark, Pete, Rushton, Thomas. Great to see you guys all in the room. So, first webinar of the week here on SB. Lots to discuss. On the menu for today, we'll start off with a look at the DXY, which has finally made a nice little rebound off of key support that we were looking at last week. We'll go over the sterling. You got some decent data as far as employment figures in overnight trade. So we'll take a look at where that stands. Aussie yen on the breakout that we saw there. The holding gold, we're right at support. Keep your eye on that, and then we'll continue to track this this Ethereum trade, which just continues to pay off. The technicals just look really clean. So if you guys are into trading cryptocurrencies, we'll just give you a quick update on that. From the previous night's updates, we'll take a look at the euro dollar and dollar CAD. And then we'll take a look at some of those crosses that we looked at late last week. So Euro Aussie as well as Euro Kiwi, both were on the menu. If you have a trade setup that you'd like to review, that you didn't hear noted, or anything else that you want to kind of throw on the message board, feel free to do it at any time. Otherwise, let's jump right in. So, yesterday's update looked like this. So we've been tracking this dollar advance off that 92.62 level. With the rebound, really, even in near term, we weren't too sure, right? If you guys recall the previous update, we were looking at that slope. We weren't too sure about getting aggressive on that slope because we hadn't made any touches yet. Lo and behold, obviously, once we got the break of that June low day close, near-term resistance at 93.60, this thing just popped right through and went right into the 94 target where we pulled back since. So as it stands, as long as we stay above this median line, you're kind of going to still want to stay constructive. Obviously, the highlight of today will be the FOMC minutes. So let's go back to last night's update. Again, here's what it looks like now. You can see we came right into that 94. We pulled right back. Here's what the intraday chart looks like now. Okay, you still want to stay constructive basically while above this. As I noted in yesterday's piece, there's no change to any of our core levels. So bullish invalidation is still in 93.06. Near-term support is still in 93.50, but you had that median line ahead of that. Now you're getting some divergence on these highs, and I wouldn't want to chase anything ahead of the FOMC. But the thing we want to be looking for today is whether we see any more clarity or we get further insight on any discussions going on the timing of the offload of the balance sheet. As far as interest rate expectations, again, if we take a quick look at what markets are factoring in, as it stands right now, they've pretty much all but priced out December. Here's what the December expectation looks like, right? There's now a 51% chance that we're going to see a hold. We were hovering somewhere around 55% prior to the last FOMC interest rate decision. So you've seen those expectations start to wean off. If we do see a recalculation or readjustment, or the markets kind of shift back their interest rate expectations, yeah, that could fuel some further upside. Okay, so no change to any of our levels. The whole game plan remains the same heading into the FOMC. As we always say, these events are not going to change our outlook. If anything, sometimes they can offer, just further, just that spark that you need to get the move get the move going. Rushton, hello, Rushton, great to see you as well. No worries. In market with this trade. D, which one are you talking about? Dollar yen? Let's take a look at dollar yen. It wasn't even on the list today, but she's in the trade, so that was number one. Number two is dollar yen. Any questions on DXY before I move off? Again, that's going to be really the biggest event risk for the day is definitely going to be that FOMC interest rate, the minutes rather, from the last interest rate decision. Okay, let's move right along. Let's take we'll take dollar yen rather early in the session here since D's already in this trade. Here's what dollar yen looks like. Not really a big fan of it, to be quite frank with you. I was talking with Jamie about this yesterday. In fact, jumped into a little short to try to fade this move here yesterday. Took a quarter off it off and then got stopped out at break even. So again, not necessarily the best way to try to play this, but you're still coming, you're still seeing that momentum divergence, price action making a new high, the oscillator making a lower high. The 618 is on the way up, so it's not necessarily going to be, a key level. This is going to be the operable retracement. Give me 1 sec. Let me just play with these levels for a sec, D. It's 38.2. And where's that 100-day moving average now? Right around 1126. So 1126 would be right down around here. Somewhere in that range. So that's what I'd be looking at as far as top side targets are concerned. The only thing I would say on this one, and again, I'm not in this trade, and as you've seen on the intraday charts, I haven't really been updating dollar yen just because I'm not a real big fan of what this is doing right now. If anything, I saw this as a near-term breakout, and I was just looking for a fade back into support for the rebound. But now that we've pushed higher, made divergence into a 38.2, recognize that this is simply the monthly opening range highs. Okay, so objectively, forget what anyone else says, Michael Boutros says, or whatever. If it breaks the objective monthly opening range, it's going to shift your focus in the medium term back to the upside. So I would be using that, essentially that 100-day, moving average at 111.29 or so, 26, as sort of the confirmation of the range break of the month. Then it would be a much more constructive trade. As it stands right now, you're coming off resistance with near-term divergence. Watch out. D, I'm not sure which side of the trade you're on here, but know these levels here. 111.93, 111.97. Okay, and 110.25, this level right here that you see, this is the monthly open. Okay, so let me just drop that for you. There you go. So D's long from 110. Was hoping to get through 111.20/30. Okay. It depends how much you're looking at, how much pain you're willing to take on the trade. You're obviously a nice 74 pips to the upside here. I would definitely, again, I can tell you what to do precisely, D. But from my standpoint, personally, if it was me, I'd be looking to take a little bit off the table right here, bring my stops up to break even. If you get that push, look at that 100-day moving average. Again, it's been a decent pivot in price, but that's where if you get the break, I think you have plenty of upside. But at this point, you're testing initial resistance, plain and simple. Have targeted now at 110.90. Need a stop level for balance. So a quick way that I always usually do it is I will put a stop under the previous session range low. So look for the Asia lows, or look for the European lows, I guess, at this point. And that's where I would put the stop, because if you make a break of the previous session's range lows or highs, typically you'll see a run in that direction. So for an intraday trader or for a near term, probably don't want to be holding that position. All right. Okay, moving right along. Sterling. Here's what British pound looks like. To kick things off, put out a piece on this on Daily FX yesterday. If you guys saw it, we're at a big near-term support zone. I still think, you're at risk for a little bit more of a move lower before it starts to rally. You guys know where I stand. I've been a bull on the sterling for some time. So you don't want to fight this decline just yet. I would need a asserted and stabilized move above 129.30, as I noted yesterday, to really confirm some sort of reversal. That being said, you're still at support, 128.48. Now, just lower, okay? And by the way, the significance of that level, first of all, momentum at 40. You have the 618 retracement. This is of the decline off the highs that you made back here. Then you have the 100-day moving average. Okay, all converge right there. So on the near term, interestingly enough, another 618 shows up from the ascent off the lows you made in June. It's 128.48. Okay, just lower, you have basic slope support. All right, and within the confines of this decline, you have channel support. So long story short, guys, what I'm personally looking for, again, you have a lot of FOMC event risk on tap. You had the BOE, or rather the UK employment numbers were really strong, okay, really strong, and it still wasn't able, or didn't give this thing enough fuel to even get us into 129.28, which to me tells me there's still a broader pressure holding this thing down. So look, if we get FOMC, a jackknife perhaps into this level, or a nice rebound into channel support or lower median line parallel, these are both levels of which I'd be interested in looking for a little bit more of an exhaustion trade, trying to fade the move. It's either that or a break above 129.30. Until you do that, treat it as a range. Treat it as a range. Okay? And just remember, pound is notoriously known as a professionally traded market, so don't try to get too cute. D, you're welcome. I hope that helped, by the way. Yeah, for dollar yen. Any questions here on pound yen? Or excuse me, pound dollar before we move off? Okay. Aussie yen, number 4. Looks like this. I think you have Aussie data on tap tonight. Aussie employment, if I'm not mistaken, will be on tap later tonight. We're looking for unemployment to hold basically at 5.6%. With a gain of some 20,000 jobs. Now, previously we had a gain of about 14,000. So Aussie dollar, I just want to talk about this real quick first. We'll make this number 4, then we'll jump into Aussie yen number 5, is coming off a big region of, as well. And I like this here kind of to hold a support. Now, let me take a step back. Here's what the daily chart looks like. The level is essentially defined by 78.30, okay, basic 236 retracement from the ascent off the lows. Or excuse me, this is a 236 from the decline off the highs here. Just basic. But it also represents the swing highs that we made last year. Okay, that comes in at 78.35. So big area of, technical significance, let's call it. Add to that, within the confines of the advance, yeah, we saw a topside breach, but like we always tell you guys, sometimes it pays to keep that slope on the chart because markets, once they break back into that formation, will continue to use that slope as support and resistance, and that's exactly what we got here on the pullback. Now, within the confines of that, this is embedded, right? You have this longer slope, nice resistance, also right there. So you had all that stuff lining up, and it did close right in that pocket, which had me concerned. And even on the near term, check this out. You guys have seen this chart before. This slope that we were working with, even yesterday, it was below here as we were trading in Asia. I was going to highlight this chart for you guys, but I didn't know how to play. I didn't know if this was a false break scenario, which is what I was hoping, or if it was just going to continually just get massacred. So I would still use caution because you're heading into the FOMC, but initially the bounce looks like a pretty nice bounce off of basic slope support. And even if this was a test of the lower median line parallel of that downtrend, kind of reversed and popped right back in. So I don't want to stress this slope here, guys. I'm going to just dump that right now. I don't want to stress this slope, but I'm just to put things in perspective. Okay, your weekly open comes in here, 78.89. Weekly opening range high is just a little bit higher on 79.18. So these are the levels that you would need to sort of clear to get the go-ahead for continuation of the broader uptrend that we've been in. All right, so maybe I'll highlight this tonight ahead of the release. If you'd like to take a snapshot of this chart, remember you can always do that by clicking on the top right-hand corner of your GoToWebinar screen if you need that chart for later today. Should see some volatility, between the FOMC dollar price action and the Aussie data later tonight. Maybe we can get a nice play on this one. All right, Aussie yen is another one that we've been talking about. Here's what Aussie yen looks like. This one just straight up has, charged a nice breakout here. So here is what Aussie yen looked like last night. And we were talking about this downtrend resistance level. Okay, this is basically a very similar trade in that Aussie yen came into its major critical support level last week. We talked about that 85.46. In fact, right here, that was back on the 10th, we were noting that that's a big level and represents key pivots in price and converges on multiple slopes. Well, guess what? That was the exact low. Worked out like a charm. The rally came into the start of this week, setting up its weekly opening range below the upper parallel. And last night, again, into the open of Asia trade, popped right through. So I'm inclined to stay more constructive on Aussie yen, and we'll bring up our bullish invalidation level. It was at 85.46. We're going to now bring that up to 85.97, essentially the 86 handle. Topside targets remain unchanged. Wouldn't go chasing it from here, though. Let this thing settle down a little bit. What I don't like about this trade, and you guys know what I'm going to say, is the yen. So, other than that, looks pretty decent. Looks pretty decent, even within this slope. You see that slope? Break, breach, come back, test it as support. Wouldn't be surprised before we move off. Okay, that is Aussie yen. Moving into some of the other ones that we want to jump into real quick. I do want to take a quick look at euro. We'll do that as number 6 for now. And then we'll take a quick look at gold and Ethereum. So here's what euro looked like earlier in the week. And if you remember, the daily chart really highlighted that 1876 level as a critical region of resistance. It converged right on the upper parallel, and we were looking for the pullback. Okay, took a while. And we even added that slope. Now, I have been, I'm sorry, guys, where am I looking for? Or I have adjusted the slope. So if you guys go back to the previous update, the one that I published on the 8th, I was using this pitchfork here, little unorthodox, but it seemed to match slope pretty good. I have adjusted that since to this basic slope resistance, extended off that high, literally caught the low, and then extended off that low. So again, always kind of adjusting your slopes to what the market is telling you. Here's what the new one looked like that we set up last night, or this was back on the 14th. We cited a downside bias below 1834. Need to see that break sub 1748 to get this thing going, looking for a tag of the median line. So look, on the daily chart, here's what it looks like. You came back, you bounced off of slope support. You held monthly open resistance, which is what you want to see in downtrends. You want to see that monthly open offer that region of resistance. And then after we came into that monthly open resistance, just collapsed a little bit more. So within the near-term approach of this decline, the weekly low that we set yesterday is still in place. So I'm more inclined to use this right here as a weekly opening range to get things going. I'm still thinking the risk remains for a move back into this median line, possibly 1616 would be areas of interest for support, possible exhaustion. But with where the dollar index is trading, and obviously 60% of that being this, wouldn't be too surprised to see a little bit more dollar strength giving a stab lower here in euro. Rushton says, your report will be appreciated on your Aussie dollar. Thanks, Mike. Looking at long trades soon. Cheers, Rushton. Yeah, I'll have that. I'll have something for you tonight for sure. By the way, the Aussie employment data is at 1:30 a.m. here in the States. I got your question. I got your question. Okay. And Russian. Okay. Any questions here on Euro? So watch that slope. I mean, it's pretty darn clean. Okay. Sorry about that. I was just kind of looking at this real quick. So moving right along. Euro Aussie. So that was Euro dollar. Number 7, Euro Aus. Looks like this. So the Euro Aus trade, well, let me start off by the daily chart, and let me show you what we started the week looking like. So, question was this break legit or not? Level that we defined was 49.23, 49.18. You had slope resistance there. You had Fibonacci resistance there. You had 100 and a 618 overlap. My favorite levels. I held for almost, 2 weeks? And then we finally made the break. So if the break was legit, that same region should have held as support. If we dip back below 149.17, that would kind of invalidate the idea. Well, that's what this thing did. It just turned around and broke right back below. I think, a lot of that has to do with both our biases on the Euro and Aussie, so we shouldn't have been too surprised, but here it is. Easy break, basic trendline support. Forget the pitchfork, just basic trendline support. And now you're back below that 49.23, 49.17 level. At risk here. If this is an objective break of the weekly opening range, and it's Wednesday, you're basically at risk for further losses. So if you're looking for a near-term support, or at least initial targets, let's call it, at 147.96, 148.20, this zone right here, a longer-term trendline support that has been just a very decent pivot in price, even when we broke it, instant resistance, break, acceleration, support, you get the picture. So keep your eyes on that as you head into Aussie employment later tonight. And again, another trade that we'll be looking at, that if we do get that Aussie strength, look that final drop into 148.22, 147.96, just the initial support. And the August open, obviously the monthly open. By the way, just to put things in perspective, if we were to clear 147.96 on the downside, that would be an objective break of, well, I'm lying. That would be a break below the August open, but the monthly opening range is just lower. Let me highlight that for you. So here's your monthly open. Boom. Actually, it's right here. So levels of interest on the downside here for Euro Aus. At this point, I basically put bearish invalidation at the weekly opening range highs. So that puts us right around here as the new bearish invalidation. Questions on Euro Aus? All right. Euro Kiwi, number 8. So similar scenario in Euro Key in that you saw a break of near-term upslope support, but on this one, you're still flirting with a hold of the weekly lows, and you're still flirting with a hold above this median line. Let me snap these levels for you. So look at this trade. You guys have all seen this chart before. Pretty well-defined opening range for the week, taking shape right below a 618. You want to respect that break in whatever directional break it makes. You want to respect that break. So if it does break to the downside, which is our favored move, on this one, I'm not really a fan of buying Kiwi, which is why I would favor personally the Aussie yen, Euro Oz, which would be Euro weakness, Aussie strength. I think your better shot is that. Necessarily than trying to be, too constructive on the yen, on the Kiwi here. So long story short, look for a break of the weekly opening range on this one. Again, the levels remain unchanged from earlier this week. Just tweaking these levels for you. That's what I would be looking at. I mean, there's tons of room if this thing breaks that level, but that is such a big, big, big resistance level. Keep in mind, it's just the yearly highs. And today, by the way, if we were to push, and even stretch sub 161, 160.90s, you would have made and would have constituted an outside day reversal off resistance. So if we were, again, if we were to make that move here on a daily close basis, that would also shift the near-term focus to the downside here in Euro Key. Does that make sense? So looking for clarity here. Uptrend resistance in view. All right, that is number 8. Dollar CAD, number 9. Ooh, dollar CAD. So watch this one. You have oil inventories later. Here's what dollar CAD looks like. On whole, it's been it's behaved very, very well as far as the technicals are concerned. The only thing I don't like about it here is it's just losing some steam. You know what I mean? Here's what it looks like on the intraday chart. Well, let me take a step back. This is why the region we were testing was so critical. 127.23, 127, 39. You're basically looking at a confluence region of slope. 236, 2016 low day close, all converge right there. So it held as really strong resistance. We snapped right back of it into the close of last week. But then here's the break. If this is a legit break, you want to see acceleration. We always talk about this. I don't want to see this break and then do this nonsense. I want to see this thing freaking take off. So the fact that we're not getting that, I'm kind of losing interest. I think it needs a catalyst. I think the FOMC could be that catalyst of further dollar strength to give us the last dollar thrust higher. But at the end of the day, you're in the trend until you're not. And I'll stay constructive on this while above Friday's low at this point. Right around 126.52, let's call it. Not bad. Not bad. Obviously, we can't work with that retracement until we get some sort of confirmation that we've made some sort of reversal here. But ongoing divergence into the highs. Look for some near-term weakness. You have to stay constructive near-term above 26.50. Questions on dollar CAD. That is number 9. Okay, a quick segue into some of the other trades we've been looking at. Here's what gold looks like big trade that everyone's talking about. That'll be number 10. Then we'll do Ethereum. But gold has been, making a lot of headlines, and that's when you want to start paying attention even more so to price action, because people are going to get suckered in just by the story and not by what price is saying. It was a breakout, plain and simple. That's true. It came into resistance. That's also true. But we've pulled back since, and that level was defined right here at 1293. You had slope. You had the close highs for the year. On a near-term basis, you have just some basic channeling. Okay, channel resistance. Turned right ahead of it, and now we're checking support, basic support at the August monthly open. So you have a support confluence region of basic support coming into monthly open support. Look for a reaction here, as I said yesterday. And this is something, again, that could react really nicely today as we get into the FOMC. Especially if interest rate expectations are shifted forward, gold does not pay yield. Typically, that'll weigh on gold prices. So if interest rate expectations start to really reaffirm a December hike, well, that could help the dollar and really hamper, demand for the yellow metal. All things held equal, all things held constant, we're simply at channel support. All right. Or broader bullish invalidation, or at least for me, what would have to happen for me to shift my broader focus lower would be 1248. I break below that. But I think we got some good days for gold ahead. I just think near term, if that gives out, we have to leave room for a larger correction before resumption. Any questions on gold? All right. Last but not least, Ethereum. Here's what ETH looks like. Very, very interesting trade. It's been so clean. Technically, I'm impressed because I don't think all the other cryptos are really playing as nicely. In fact, if you look at Bitcoin, yeah, it did rip and it did surge a little through trendline resistance here before reversing, but nowhere near as clean as Ethereum. So here's price action. This is the setup that we published earlier. Again, key support is at 269, 276. That's exactly where the decline bottomed out yesterday. I was showing you this channel saying, look, if we stabilize above it, we'll start to look for a resumption trade. 100% extension kind of screams out. This is just a simple ABC type of two equal legs down corrective type of move, in which case, you want to look for broader resumption. So look for a break above the median line. Top side targets would be unchanged in such a scenario. But it's been a pretty clean trade. Now, again, that would require some dollar weakness. And obviously, these things don't always trade based on like dollar strength or dollar weakness, guys. But if the dollar does rally across the board, it might cap the advance near term. So don't be too surprised if you see some sideways lateral movement here before we finally start to break higher. And that's the ETH. Okay, any other questions from you guys? We wrapped up a little early today. Or any other pairs that you guys are looking at, feel free to drop them on the message board. Keep in mind, again, for today we have oil inventories out later this afternoon. FOMC minutes is likely going to be the biggest player. Again, we have Jamie will be on board with the midweek strategy board, webinar at 11, excuse me. And if there are no other questions for today, we did not do Euro Yen Russian, but if you would like to, we can. Where's Euro Yen? Right, this thing. So here's what I'd be saying on this Russian. I was looking for a rally to here, to short, obviously. it came a little later than expected, turned just ahead of the upper parallel. So I don't know if I want to chase it per se. We already made a 70 pip decline off the high, but I'm personally thinking you get a little bit more of a pullback here. So this was a big resistance zone, right? Monthly open is just higher. I'd be looking for the pullback again towards the median line for an entry against this low to try to get that break to the upside, targeting 132.20. But the immediate risk, I still think, is for a little bit more of a pullback from here. Russian says, okay, got your read. Thanks. Hey, you're more than welcome. You sparked my attention, though. You sparked my interest, so hold on. Okay, so we highlighted 129.50 already. Yeah, something like this would make sense. Or even 128.88, but I honestly don't think you necessarily make it that far. But this is the first area I'd start to look. 129.23 for support. Also, by the way, Rushton, real quick, that's a pretty big reversal we just made. So if we push through this level here, that would also constitute an outside day reversal. Again, on an upswing, something that is typically seen as bearish. Make sense? Okay. Well, if there are no other questions, we'll go ahead and wrap it up here. Thanks again for everyone who attended. I'll have this up and archived as soon as possible. And I will see you here same time tomorrow, same place. Best of luck trading. And again, keep in mind, Jamie's up in just a few hours here for the midweek strategy webinar. Cheers, guys.